The federal government recently announced that as of August 2024, they're going to allow 30-year amortization period to a first-time homebuyer on a newly built home. So if your mortgage is insured, by that what I mean is if your down payment is less than 20%, in that case, you're able to stretch out your mortgage up to 30 years now. Whereas earlier, you were only able to get a 25-year amortization period if you're putting a down payment of less than 20%. So is this a move in the right direction, or it has got some downside to it? So we will be discussing the pros and cons of this new ruling, and we will do that by simply doing a comparison between 25-year amortization period versus 30-year amortization period. So without wasting any time, let's discuss this out. So just for an example, we're going to target a property worth $500,000, and we're putting a down payment of 5% in both the scenarios, that is with 25-year amortization period and as well as 30-year amortization period. And if you look down here in the first scenario, that is we're putting out 5%, that's equal to $25,000. In this case, if you're putting a down payment less than 20%, you'll have to get a CMHC insurance. So that is $19,000. So this scenario is with 25-year amortization period, and this scenario is 30-year amortization period. So in both the scenarios, we're looking at $19,000 as a CMHC insurance, and the total mortgage required we're looking at is $494,000. Okay, so as I said, this is 25, this is 30, and the mortgage rate I'm taking as is 5%, and the monthly payment in 25-year amortization period scenario is $2,873, and in 30-year amortization period, we're looking at is $2,642. So here, of course, you're saving about $230,000 a month for sure. So the monthly payment is lower on 30-year amortization period because it's staggered, and in 25 years, we're looking at is $2,873. So that is one of the pros, or one of the advantages of having a 30-year amortization period. Okay, so now let's check out what happens, or we have to consider the numbers as a whole when you pay up the whole amount of mortgage, that is amount of 25 years and the amount at 30 years, and see what the real number shows. So let's check that out. So here's the amortization schedule. So here we are. So this is the amortization schedule for the scenario 1, that is 25 years. And from 1 to 25 years, let me just scroll this down. So you end up paying, the total amount you end up paying is $861,000, which includes your principal and as well as interest. Okay, so in total, you end up paying $861,000. So this is a ratehub.ca website. So I won't be able to show you 30-year amortization schedule because their website is not programmed yet. So I've done that on an Excel sheet. So I'm going to quickly show you that. So just for example, I ran the number for 30-year amortization period on a Google sheet. So here we go. So the purchase price we're looking at is $500,000, not $50,000, $500,000. And the total mortgage required amount we're looking at is $494,000, just like the previous one. And the amortization period we're looking at is 30 years. So that's the difference here. And the interest rate, I'm taking it as 5%. So we got to see on this column, that is carrying costs. So if we go down below on 30 years, that is, let me just scroll down over here. So here we are. So you end up paying on the 30th year, you end up paying in total, that is principal amount and as well as interest. Total amount you end up paying is $954,000. So I've done a quick summary here. So in 25 years, you end up paying $861,000, and during 30-year amortization period, you end up paying $954,000. So the difference amount we're looking at is about $92,000. So yes, with 30-year amortization period, your monthly carrying cost does come down, but over the long run, you end up paying more, and which is quite a significant amount. That is about $92,000 give and take. So now let's do a pro and con analysis and understand if this new ruling of 30-year amortization period is a good deal or no. So here are the pros and cons of 30-year amortization period, and you can see on the screen it's mainly dominated by cons, but we'll go through them one by one. So let's start with pros. So it helps in bringing the low monthly payment down, which is nice, and it helps in affordability in some capacity. And the con is it's a more of a pay less now and pay more later setup. So you pay less monthly payments, but if you run the numbers and if you calculate the principal amount and the interest in total, by the end of 30 years, you end up paying more. So that is something you need to consider. Second is, as affordability improves, it boosts demand, which basically is more competition, and more competition puts upward pressure onto the housing prices. So which is kind of not a win-win situation for a first-time home buyer. Third is, with each monthly payment, higher amount goes towards interest payment as opposed to principal amount. So therefore, you're building equity on a slower rate. Okay. And the fourth fourth one is this is only applicable to a new builds, which is kind of a catch in this scheme, because new builds are already selling at a premium price point as opposed to resale properties. And especially as a first-time home buyer, I'm not a big fan they buying or getting into pre-construction. For investors, it definitely makes sense to get into pre-construction properties, but for a first-time home buyer, I would suggest to get into resale. I separately made a video on why you should not buy pre-construction properties, I'm going to put that link in the description below, so do check it out. So overall, I don't think so 30-year amortization period is a win-win for a first-time home buyer, considering all these pros and cons. But we need to address to the main problem, and that is the supply. We are not building as much housing as we need, and I don't think so we are going in the right direction, at least in the Greater Toronto area. So let me quickly show you a chart. So here's a chart by Urbanation, which is a reputed real estate research firm in Canada, and it suggests construction starts to fall to 15-year low in 2024 as completions rise. So let me explain this to you. So this is a chart of showing new condominium starts and completions. So by starts, I mean the units which are the condo buildings which are just started their construction, and the completion means the new construction has been completed and the new condos have been delivered to the market. Okay, so the blue bar is basically are the starts, and the gray ones are the units which are completed and have been delivered to the market. So in the year of 2020, you can see the blue bar, which is there were about like more than 25,000 units which were being built, and in the year 2021 it came down to just close to 20,000, and in 2022 it went up to the starts went up to above 25,000 again, and in the year of 2023 the starts have come down to 15,000. And if you look here in the year of 2024, the starts came down to 11,500. So this is because of high interest rate scenario, not many investors are jumping into the market, and secondly, builders are not building because it's not economically viable, again due to high interest rate scenario. So down the line, because we're having less starts, there are going to be less of completions down the line, and from 3 to 4 years from now, chances are very, very high we're going to run into the same problem of supply. And in the year of 2023 and 2024, there were good amount of completions. That is, in 2023, we had 20,000 completion of units and were delivered to the market. And in the year of 2024, there were 20,000. They're projecting that the 27,000 units are going to be delivered to the market. So this high projection number of 27,000, or in the year of 2023, we had 20,000, is happened because we were building from the year of 2018 to up till 2022. And because of that, we're having more completions, and in the year of 2023 and 2024, that's the reason, because of high completion, the rents have slightly come down, which is a good thing for renters. So overall, I don't think so the amortization period of 30 years is going to solve the problem of affordability. The core problem is that we need supply of housing, and which I don't think we're building as of today. So that's something we should be focusing on. Please let me know in the comments below what you think about this, and I hope you found this video valuable. Please smash that like button and subscribe to the channel. That really, really helps. And thank you for watching, and see you in the next video.